Ansaf, good to see you.
Yusuf, great to be here. Thanks for doing this.
I was looking forward to it. This is the longest conversation we're going to have. I'm just joking. Great to see you. And thanks for making time. I know it's always busy on a weekend, so I appreciate you making the time. I know a lot of the listeners as well.
Like,
We can start off. I you know, you've got a phenomenal profile as an investor. Perhaps it would be good to just set the scene and get a little bit more idea about your background and how you first got into venture. And then if it's okay, a lot of the people who are calling in today, our founders are either interested in venture, either are looking to build a company. So we want to tend to try and do these to be able to make sure that we get some very specific advice. That's one aspect. Second, I do want to talk about kind of how you think about the venture landscape overall, not just from an investing standpoint, but how you think about global ecosystems. So I just want to kind of set the scene there. Let's start a little bit about your background. How did you get into venture? You spent several years at Lightspeed, and have been involved with a number of great companies. I'll ask you a bit what stood out about those, but would love to just get a little bit more starting point from that standpoint.
yeah, of course. So thank you for helping organize this. Just on my background very quickly, I grew up in Oregon. I went to school for undergrad at Stanford, and as many people do, I caught a little bit of the entrepreneurial bug from there. And what I really realized, I wasn't thinking about entrepreneurship. I mean, entrepreneurship really wasn't even a thing that people were talking about at the time when I even landed at Stanford as a sort of capital E entrepreneurship. But what I really was excited about was people with a lot of energy focused on how do we leverage technology for making an impact. And I think what I found when I got to school was that, the sort of traditional paradigm that you kind of work your way up some kind of ladder, whether that be a corporate ladder or a government ladder or whatever it might be, was just not even something that people took very seriously. And I found
Right.
these pockets of really tight knit, what we would now maybe call aspiring founders, who were really just tinkering and focusing on how do we use all these new emerging technologies to do cool stuff. And I think that's kind of the energy that got me initially sucked into knowing that this was something that I wanted to be a part of in some format. And then, when I graduated, I went to McKinsey right after school. It felt like the right thing to do. And I spent about 2.5 years there, ended up having a phenomenal experience, learned a lot of things. But really, my heart was still in that sort of entrepreneurial ecosystem. And so I joined a startup called RelateIQ, which was one of the first applied AI companies, believe it or not, now, over a dozen years ago. We were still
And a great
talking about.
exit to Salesforce, of course,
Yeah,
right?
we sold to Salesforce in 2014 for about $400 million, and at the time that was a good exit. These days, that's like a Series C, but back then that was something meaningful. And then I got an MBA, and when I was graduating, I was sort of trying to figure out what the next step looked like, and I think I still had that entrepreneurial itch to potentially start something, but I didn't have sort of conviction on any sort of specific space that I wanted to go into, and I decided to maybe try this venture thing for 1 or 2 years and see how that kind of worked out. And so I talked to, a handful of folks out in Silicon Valley. At the time, there was really not a structured environment, as you know, for sort of
Yeah.
entry level sort of venture capitalists. And so a lot of that was just a lot of relationships I had built from previous years and from sort of tinkering for a long time on different ideas and using venture capitalists as sounding boards. And so one of them was Lightspeed, and I joined Lightspeed in 2016, and was there for about 6 or 7 years before leaving to start my own firm called Latitude, which I'm sure we'll get into. And that's kind of been my venture journey so far.
I've been in venture coming up to 5 years. I'm still considered entry level. So just FYI. I definitely look to you and a number of our friends in venture for more advice and guidance. So look, Lightspeed, revered firm, definitively have built a phenomenal track record, have been involved in every aspect of innovation, right down from consumer into enterprise, of course, a lot in the security space, and now so much more in the AI space. Um, I think one thing would be sort of interesting to kind of set the scene is you were there for 7 years. You and I had some interactions with a company that called Orcus that got exited, which was kind of my first interaction with you. And so you've seen a number of companies over time. Talk to us a little bit about where you've seen. I'll be specific. Talk about some of the pitches
Hmm.
over the 7 years that stood out for you? What did founders do that captured the attention of you and the kind of investment committee at Lightspeed that you're like, that looks like something we should be leaning into? Because I think a lot of founders, go through this now. I mean, of course, the industry has grown so rapidly, and there are a lot of firms out there. There's no shortage of material about what you should and shouldn't do. But I think it actually would be really useful to hear from somebody who's been a very active investor like yourself, who's seen the volume of kind of pitches and companies. So, number one is, are there pitches that stood out to you? Maybe you could relate some stories there, and then let's dive into some things about the do's and don'ts, so to speak.
Yeah, I'd say that some of the probably the main category of things that stand out is what I would call founder market fit, right? This idea that we talk a lot about product market fit in the venture world, right? Do you have, customers actually pulling for your idea and actually creating revenue for you? But, when I say founder market fit, what I really mean is there a uniqueness in this individual or this founder or this founding team's background that is clearly perfectly fit for this opportunity?
Right.
And, one example of that, is, someone like Arvin Jain from Glean is a great example, right? He
Brilliant.
spent, 10 plus years at Google first, being a distinguished fellow and focusing on search as his primary sort of focus in engineering. Then he helped co-found Rubrik, which is a deep data infrastructure company. He was a founding engineer of Riverbed, early engineer, founding engineer of Akamai. So just a great, obviously, founder profile. But then when he wanted to launch his new company, Glean, which was focused on enterprise search, he had sort of two main components that made it almost a no-brainer, where on one hand, he understood how to build performance search, which is actually a really difficult problem to solve.
And he did it at the number one company in search, of
And
course.
he
So
did
that's
it at the best company. Bing is still not caught up to Microsoft after all these years. I always say,
yeah.
search is actually a really difficult problem to get right. And then also understood that companies and organizations are really sensitive around their data. And so when you expose data to a third party, not only from a go-to-market perspective, but from a security, compliance, et cetera perspective, there's a lot that goes into actually making that actionable, especially when you enter into the enterprise and not just focus on other tech companies. But he had seen that sort of firsthand, obviously, at Rubrik, which was helping manage sensitive data and backing that up. And so that's a great example of one person or individual who I would say, hey, this is a perfect founder market fit for the type of idea that he ended up pursuing. One company that I was not personally involved with, but I remember pitching at Lightspeed, and we kind of had a similar reaction, was Max from Fair. So Max was very early on at a company called Square, obviously, which a lot of us know, sort of SMB payments focused company. And what he had seen serving and working with a lot of SMBs at Square was this idea that actually there's a lot of other bottlenecks to actually being able to build a successful SMB business. And so one of those main characteristics was this idea around, wholesale access to products and goods. And so when he came and pitched, his deep knowledge, I mean, we walked out of that room smarter than we walked into that room,
Right.
right? And that type of deep insights and almost education that a founder can provide because of how much they know about a specific sector, it just really leaves an imprint versus somebody who, in passing on a whiteboard, was trying to think through what could be the next great idea. It's a very big stark difference between those two types of people who walk through a door.
Right. So I think a couple of key things that stood out. I think number one is being able to demonstrate the depth of the problem, right? It is a complex problem. And the second is just being able to both articulate that and be able to actually think of it from a company standpoint. Arvin Jain, of course, was an experienced founder, having built up Rubrik. Um, there are a lot of people on this call who are first-time founders, maybe aspiring founders, probably a whole bunch of people who are probably in your network. They're thinking, okay, I'm going to
Yeah.
be meeting him next week, and what do I need to do? How do you think first-time founders really need to stand out in being able to get funded, irrespective of the firm or the check or the stage? Like, what really should they be thinking and focusing on as they think about going and raising money?
Yeah, I think it kind of goes back to that latter point where kind of Max was a first-time founder in that context where, even if you don't have the same deep experience set, but you've really understood and studied the problem to a degree that, again, you almost, as an investor, you're leaving that conversation smarter than you entered it. I think that's really important because maybe you probably see this too, is where you see a lot of founders who, they might have had three ideas a month ago, which is now whittled down to one or two, and they come in pretty raw even on that idea. And I think people who have really sat with a problem set and hopefully, ideally, even experienced it in some fashion, that can be as a consumer or a customer of an area. Doesn't have to mean that you were building in that specific space, but you truly understand why is this area a potential opportunity for disruption. And again, it's almost stark. It's almost people talk about pattern recognition and venture. I actually don't think it's pattern recognition. I think it's
Right.
just it's so black and white when you see somebody who truly deeply understands a problem area versus someone who's maybe just doing it or just getting exposed to it sort of in the last few months. And so it's really, for the aspiring founders, I think, can you demonstrate not necessarily pure domain expertise, but that this specific problem, you truly are one of the people who has a deep insight into why there's a solution to this specific
And
area
you've
set.
done the groundwork to be able to do that. Let's shift gears a little bit. Like, one thing to think about is Silicon Valley has been successful because of it being an ecosystem. That there has been, there's been a lot of factors, a lot of pillars that have sort of put into place. A lot of the found we've invested globally, and we've looked at companies globally. How do you think about venture as an ecosystem in different geographies? What Pakistan, not just being Pakistan specific, but
Yeah.
a lot of companies, a lot of industry, a lot of geographies are trying to basically build that hub. What are the two or three things that you think are kind of required to be able to build in that ecosystem for that to be successful?
Yeah. I think and this is kind of a context from an investor sitting in the US looking potentially at
Please.
companies,
Great.
in other ecosystems. And so I think one of the things that is really helpful is sort of a talent and education pipeline, right? And they can come in two forms, right? They are, in China, everyone knows Tsinghua and Peking. In India, people know IIT. Like, do you have ecosystems of clear top tier educational talent that as an investor you can at least use as one of many signals to say either I should be building relationships with people coming out of those schools or building relationships with professors or investing in programs that are at those universities so that I can at least build a brand for myself or at least understand which companies and people are coming from those. So I think there is an importance for a base structure of an educational system in many of these ecosystems that can serve as a early signal. I think the second piece of this is do you have early successes of companies that are teaching other aspiring entrepreneurs how to be great, right? We saw this a lot in Southeast Asia, where once you had companies like Grab reach sort of escape velocity and success, you had a lot of people who were part of that organization who spun off and started new companies, and they knew what that early startup journey looked like and could actually replicate and start to build on that. Obviously, in Silicon Valley, we've had that for now 50, 60 years. But for these newer geographies, I think having some of those early success stories has really boosted those entrepreneurial ecosystems further than others. China, obviously, being at the forefront, India, maybe a second. But Southeast Asia, I think now in the Middle East and in Pakistan, you're seeing companies like Kareem and other folks who are clearly have led the way and are now hopefully creating enough of an alumni base or people who had exposure to those companies to help create sort of that next generation of entrepreneurs. And the last thing that I'd say is that you obviously need, some semblance of stability, right? I think as an investor from the US and you're looking at these ecosystems, you're also thinking about the safety of your own dollar as you invest into some of these ecosystems, right? And so,
Well, I think in Pakistan, I think of course there's no shortage of stories there, but I think and having been born in Karachi, I'll say it, NED is trying to basically start to form that.
yeah, yeah, yeah,
People like Rehan Jalil at Security
100%,
AI, of course, now with Raghib, who's now heading up Altera after his
100%.
success with KVM. So there's still a lot of hope, and of course, no shortage of entrepreneurs coming out of Lums as well. So I think there's something happening. Let's just see where that lands. Can I be a little bit more tactical? There's
Yeah,
clearly some, part of this industry. The stories are, just there's just so many of them. And being able to like, you met with a founder at a particular event, or the pitch was really substantial. The work that they demonstrated. Can you talk about a couple of the stories where you have met a founder and you've kind of spotted conviction, and you're
yeah.
like, I gotta basically go speak to them?
Yeah, so one example that jumps to mind, and I think this comes to a broader sort of takeaway, which is that knowing your investor matters, right? And especially when you're pitching a firm that has more than one investor as a big partnership. Many times I feel like founders can get directed to the wrong person. Like, Yusuf knows somebody at Sequoia, and so but that Sequoia partner is not the right
Yeah.
partner or sector area for this founder's focus, but that's the only person that Yusuf might know. And so that's where that founder lands, and that ends up becoming actually counterproductive in some ways. And so I think one takeaway for the founders in this on this call is that whenever you are looking at having a call with a VC, make sure that that VC is investing in your area generally, at least from a sector perspective. And so the reason why I bring that up is that I remember when I met Cynthia Chen, who's the CEO of Kickoff and founder of Kickoff, for the first time. She had an idea really around how can we, if Credit Karma was looking at your credit score and giving you advice or marketing materials around it, how could we actually move your credit score for people who were responsible, might be immigrants or just graduated school, this like raw group of individuals who clearly should be responsible credit holders in the US, but are basically being gatekept behind the idea of having no credit history. And we knew it was a big idea because Credit Karma had gotten bought for $7 billion. We knew that Rocket, which is a public company, was a massive company building multiple financial products around sort of the simple idea of capturing customers early. But the reason why I had been thinking about it is I remember when I graduated Stanford, got my first job at McKinsey, it was impossible for me to get a credit card because
Right.
I had no credit history. And I had been studying in the fintech space, where are the new opportunities outside of what we had been seeing with Chime at the time or with Mercury? What could be a new sort of angle or area that could be ripe for disruption? So we kind of met at the perfect moment where she was pitching an idea that I had a prepared mind for, and we knew that even just on that idea that we should back her. And now she's been off to the races and growing extremely rapidly. But that's just a great example
Got
of
it.
she
Yeah.
knew who to be talking to in this big organization, and I think it kind of worked perfectly for both sides in that case.
I'm assuming your credit card application gets approved now.
Yeah, yeah, luckily,
But yeah,
luckily.
if you don't, there's a bunch of people on this call. We'll get you one in Pakistan if that's absolutely required. But we'll keep you in the loop on that one. Outside of the deck, outside of meeting, what are the things that you look beyond,
Yeah.
like as part of diligence or kind of the Ansaf Kareem kind of playbook? Like what are you sniffing for?
Yeah, it's a good question. I'd say that I spend a lot of time with founders not on a deck. So
Okay.
even first pitches, I think decks can be good structure, especially if you haven't met somebody before, you don't really know the space as well, maybe, then it can be a helpful sort of structure of a conversation. But
But
for
is it sorry to interrupt? Is it fair to say that at this stage of investing, I know that at Ridge we do seed, Series A.
yeah,
You've of
same
course got
early
to spend.
stage primarily.
It
Yeah.
really is a large part of the focus is on the founder and on the team. Is that fair to say?
I would say actually, so yes, I'd say it weighs heavy on the founder, but I actually also index a lot on the market because
Okay.
I think if you don't have enough room to run as a seed or early stage company, you can easily run into roadblocks. So if
Okay.
your inherent opportunity set is constricted in any way, that can be actually a really difficult thing to overcome, no matter how great the founder is. And so for us, the way that I think about it really is two ways. One is the core area that this person is focused on, big enough to support $1 billion plus opportunity. And or if not, are there enough adjacent areas for them to go into that could be interesting enough to map into a much bigger opportunity? Cynthia's company is a great example. Whether or not you believe that that initial entry point was big enough, we know that financial services and the sort of corresponding consumer areas are large enough to really support really, really large outcomes. And so as you kind of find your way through those, you'll be able to reach a pretty exciting end state. And so I do actually index some decent amount on market in addition to founder, but founder is obviously the core part of it. To answer your specific question, I think decks are great again for to help structure an organization, but I spend a lot of time with founders just really again understanding why and why are they chasing this opportunity and what do they really understand about this space that's truly unique and differentiated from the next five founders that might be trying to look at the same market or space as them. As you probably know, most spaces today in this very saturated venture world have more than one company pursuing a great idea, right? There are not that many hidden secrets out there. And so you just have to really be confident that this is the approach and the founder that you're ready to bet on at the seed stage, because once you bet at the seed stage, that's your company for the next 10, 12 years. Even if there's another company that's competing or out competing,
Right.
you kind of only have one horse in the race.
What do you think has been your boldest investment where you had either conversations, you had high conviction, you had to convince, other people to be able to sort of get around it, and you kind of drove that message with a degree of, a lot of fortitude.
Yeah, that's a good question. I'd say that so, you mentioned this before, Lightspeed, we're very focused on sort of pure consumer or actually deep enterprise infrastructure or security, sort of the stuff in the middle, things like financial services or
Digital
healthcare
tech
or
or others. Yeah.
yeah, those were newer areas, and those were a lot of the areas that I was sort of helping build out and tasked with. And so um, I think there's some things that come to mind that are more focused on maybe areas that I was not successful in helping us get through. So a company, Mercury, which we all know, very successful now, B2B bank. This was a company at the time. It sounds crazy given the success of that company, but it was actually not obvious at the seed and Series A stage, right? It was phenomenal founder, but at the time SVB was like the big behemoth in
Right.
the ecosystem. Every company that gets started in YC or otherwise usually uses SVB as sort of their banking partner.
Right.
Everyone believed that, the big banks in the US dominate everything. This was even before Chime became sort of a big household name. Being a bank sounded scary to most venture capitalists, right? And so I think that was sort of front and center. I remember bringing that company into the conversation at my prior firm, and it was very clear that the lack of prepared mind, for example, is really tough to get over, right? And that's
Right.
not a knock at anybody. It's just that when these new emerging spaces happen, it can be actually a really difficult conversation to
And
have.
here's Ansaf Kareem basically saying, please invest in a new bank. And they're
Yeah,
like,
exactly. New
what?
banks are great. They're valued at very, very, very tough in the public markets. But it's again a good example for I think founders on the call of like when you are pitching in a new emerging area, you are going to have a lot of things that look obvious today to many of us. That's even at sort of seed Series A don't look obvious to all the great VCs. And so their signal and how do you find and really navigate to people who are true believers who have a prepared mind. Maybe they've been blogging, tweeting podcasting about a space that's sort of in and around your area and really sort of being a heat-seeking missile for those type of investors is really important because otherwise you're going to spin a lot of wheels talking to people, even people who might be believers, but have to go convince 20 other people that this is a great business idea. That's a tall order you're even putting on somebody else to get over the line, right? And so, to your point about sort of convincing others in an organization can sometimes be really difficult. So for founders, just
Yeah.
understanding that dynamic as they're pitching VC firms is really important.
So now you have to convince yourself, now that you're
Yeah.
running a firm, what are the things? A two-part question. One is you've seen cycles, right, in this industry, right, from and you've seen the impact on that on venture. And so number one is what are the things? Question number one is are there things that you had learned in your prior firm that you are not applying, in now building your own, or from a market standpoint that you're like, no, I'm going to do this differently, and here's why.
Yeah. You know what? The core insight that I saw when launching Latitude was really driven by if you look at the venture ecosystem over the last 10 years, and I know you know this well, you see a lot of multi-stage firms go from what looked like $600 million funds maybe at its peak 10 years ago to now what look like $8 million set of funds, $10 billion set of funds. There's rumor that Andreessen is launching a $20 billion set of funds, right? And if you really just think about it from first principles, if you put yourself in maybe the founders who are listening to this call, their shoes, what they're really looking for is a partner at that sort of 0 to 1 seed to Series A stage, who is really going to be in the trenches with them and help them figure out all the unknown unknowns of starting a company and building a company. How do we get our first customer? How do we get our first hire? Those are very tactical building blocks of how do you scale and start a company.
Right.
When you're looking at a firm, any firm across the ecosystem that is a multi-strategy, multi-product firm, I think what you really have to ask is where are the incentive structures in that organization, right? And so if you are a $20 billion firm like Andreessen sounds like they aspire to be, you really have to ask how are partners incentivized? How are their portfolio teams incentivized? How are they incentivized with respect to their LPs in terms of what they're supposed to be delivering to them? And these are things that most founders may or may not think about, obviously. But as you think about, your partner as a founder at that early stage, I think actually is really, really important to know how the incentive structures work with your partner investor. And so when I looked at that in combination with the fact that if you look at a lot of the seed firms who used to dominate early stage investing when I was graduating Stanford, great firms who just might not have had generational transfer over the last 10 years. And then I spoke to a lot of founders. What I realized was there's a massive dislocation happening at that early stage. And I think you're seeing that probably every day as you're hearing about founder journeys and stories about some of those horrors. And so I think at Latitude we saw an opportunity that at that sort of seed and early stage we could outcompete and outbuild a new firm from the ground up that's just focused on helping founders, go on that 0 to 1 journey. And so that's the opportunity that we see. I think that when we look at the venture ecosystem, the net beneficiary, though, of all this capital is still entrepreneurs, right?
100%. Yeah.
Whether you're a seed stage entrepreneur or about to pre-IPO, the amount of capital available to founders to really just fund their business at scale and have global ambitions is just, it's just astonishing in a good way, right? Like I think it's just incredible for the best founders to be able to have that access and to be able to build companies that I think are drastically changing the way that we're all going to live and work over the next 20 years.
Also, how do you make sense of macro conditions over the last couple of years? Both not just about zero interest rates, but kind of what I would consider now being probably more turbulence, I would argue,
Yeah.
volatility and then some. But if you just think about that from a global perspective, have you taken some time to sort of think about, how kind of venture looks like from a global perspective, number one, and then number two is, how do you do it in the context of kind of this kind of ever-changing macro?
Yeah, look, I think it's a tough, when we were probably both getting into venture, like it was not something you didn't really think too much about macro, right? You were just
Yeah,
worried about finding the next, great company. And I think,
basically, yeah.
yeah, and the reality is that, macro is certainly having an impact. And somebody who runs his own firm, like you see that impact because, the people who we receive money from are deeply impacted. Our LPs are deeply impacted by what's happening in the macro. And so just to maybe put a finer point on that for the listeners, I'd say coming out of the ZERP era, post COVID, obviously in 2022, we saw a massive compression cycle happen in the tech ecosystem. And I think if you look historically across similar cycles in 2008, 2000, it actually was a phenomenal time for entrepreneurs and for the venture ecosystem, which sounds counterintuitive. But I think if you really think about it from the bottoms up, the reality is that the people who were self-selecting to be entrepreneurs in 2022, 2023, even into 2024 are just a very different type of profile of entrepreneur. And then the folks who obviously, I think, made it through that cycle, you're now sort of getting the benefits of what we're seeing, which I think is a generational transformation from a technology perspective with regards to AI. And so, if you got started in that time period, even though it might have been tough from a financing perspective for a founder, I actually think it was a great time to start building, and you're seeing a lot of the fruits of that with the companies that really accelerated in this AI moment over the last 12 to 24 months. I think now with the tariff situation in the US and the potential economic ramifications of that, I think there's two ways to think about it. I think it's hard to know exactly how this is going to fall out, but the one way to think about it is that sort of people who are investing in software and AI in particular, which is where I focus, you know, the the aspiration for that field is that we're driving more productivity and efficiency with the end state company, right? And so if you are a Fortune 500 company and you're looking to think about where should we be spending, if at all, actually having a very clear ROI story on AI could be a really powerful way to think about where you want to put your extra dollar. But the reality of it is that the animal spirits also kick in, and you realize that for a lot of these people, it just means we're going to pause for a while before we buy any new software, and it might be 1 month, it might be 3 months, it could be 12 months. We don't fully know, and we don't know the degree or magnitude of those animal spirits, and so that's frankly the tough question mark to think through. I think in the short term, in the early stage ecosystem, it's not having an impact. I
Right.
think if you are a late stage company. Obviously, I think that could be impacting you. At least this might not be the perfect time to go fundraise, but for great companies, there will always be good capital at good multiples. But that would be probably giving some late stage companies some pause to just see how this shakes out in the short term.
Is it fair, Ansaf, to be a little bit more directive to Pakistani founders to when they're building companies because of just it's in so many different spaces from education to business software to consumer to climate tech or others? Is it fair to advise that they should be thinking ultimately about building a product for a much wider market, just other than just Pakistan, even though the Pakistan market is huge? Would that be fair to say that that's how they were able to sort of garner the attention of international investors, or am I oversimplifying it?
It's a good question. I mean, look, I think that that's partially true. I think the thing that I think I have an open question about in terms of the Pakistan market is the willingness to pay across that whole population, right?
Right.
So obviously, big country, sixth biggest country in the world, huge opportunity set over the next 20 years. But if you
But
think about the
economic
next
buyers and consumers, of course, are yeah,
exactly. Or, I think the pyramid is probably very heavily weighted towards the top, unfortunately, in terms of
yeah,
people's ability to pay
totally.
a subscription product for an ed tech company,
Right.
who are in the middle class or lower middle class of Pakistan, which might be the biggest bulk of that population set. And so by default, if you just think about it from a math perspective, your TAM is actually much smaller than the TAM of the population, right? And so therefore, you almost by default need to be in other regions or other areas. The problem with that, though, is that for early stage companies, doing multi-geographic expansion is really, really tough. And so my advice actually for Pakistani founders is nail whatever percentage of that TAM that you have access to and get real saturation in that market before even thinking about expanding into any other geography, right? And that can come down the line. You can have a story and a narrative and a plan for how you're going to go attack that. But if you haven't really nailed your core geography yet, I think getting to, another net new country is just a tall order for any company. Like we see scaled companies in the US who don't even think about international expansion until Series C, D, or E, right? Like those things happen usually much later. And so just being thoughtful about how you're sequencing this, I
Right.
think is really important. But yes, to your question, I think that over time you have to probably have a story for most markets, not all markets, that expands beyond Pakistan.
What I mean now that venture has gone global, has gone multi-sector in everything from agriculture right down to supply chain to, of course, enterprise software, consumer, fintech, etc. How have you gone about thinking about spaces and particular sectors? Are there ones outside of your own domain that you think are interesting that founders are building in, and you think, well, that's actually interesting. You're probably not an investor in that space,
Yeah.
but you think are interesting. Would love to just get a perspective there.
Yeah, I think that the area that I think might still be underhyped is sort of broader healthcare, right? And like, we do some healthcare software investing, but I mean healthcare really broadly, including life sciences, just feels completely ripe for opportunity. When I was at Lightspeed, I worked on companies like, Teneo Bio, which was sort of using and thinking about how do we use software and sort of next generation technology to really hyperscale some of the development when it comes to R&D. I think we're just scraping the surface on that area. Obviously, it takes domain expertise from a founder perspective and from an investor perspective to, I think, do that really well. But I think when we fast forward 15 years from now and look at the life sciences space, I think we're going to be pleasantly surprised about the impact of that sector, both from a just well-being perspective for all of us, but also just from a returns perspective. I think there's just going to be many, many more opportunities there. I think the space that in Silicon Valley people talk about all the time, which I'm maybe a little bit more bearish on, is actually the defense or the sort of next gen,
Yeah.
companies that are focused on selling to the government some kind of sort of military or technology product. Obviously, Palantir is a phenomenal company, has done incredibly well. I think there are a handful of other companies, Anduril included, that could be really interesting. But I feel like there's a lot of people chasing what feels like a really hot sector, but I'm not fully convinced yet that there's actually going to be a great tens or 20 companies out of that sector that are going to be really impactful. And so, on the other side of that question, I think that the probably overhyped space is somewhere in that defense tech area.
Okay. We went 35 minutes without mentioning AI. I think that's a new record
That's great.
in any conversations you've ever had. So you got to give me some credit there, especially on a Sunday morning. Um, let's talk a little bit about that. First and foremost, the use of AI tools for building companies and in the startup stack. Is it fair to assume that the ability to build a product, the ability to be able to, whether it's a software product or being able to actually derive your message, thinking about the tooling and all the other stuff. Would you agree that there's probably more opportunity to do that now with a lot of the AI platforms than ever before? And does that change the dynamic or for companies to effectively sort of be born and be able to then go to traction, go to market?
Yeah, I think the trend is definitely in that direction. Look, I think it's undeniable for people who've been following, companies like Cursor or OpenAI's acquisition into Windsurf. These are companies that are helping engineers basically be co-pilots to them and make them much more efficient and frankly do, a big portion of some of the work for them, not all, but some of the work for them. And so I think the barrier for development, I don't know if actually the barrier for great work is necessarily lowered, but the amount of people you might need or the amount of efficiency you get out of one engineer is clearly increased, right? I think there's a little bit of we might have gotten overextended on just how great some of these tools are so far. I
Right.
think we're definitely headed in the right direction of what you're talking about, where things will be easier, more efficient. You can use Lovable now to develop something very quickly in a demo and et cetera. But if you think about the areas that you and I invest in enterprise, the robustness that's needed to be able to pass through SOC 2 and everything else that's required to get into a really large Fortune 500 company, for example, that bar is still really, really high. And so
Right.
I think the exciting thing is that these tools are making it companies more efficient. I think for aspiring entrepreneurs to get off the ground with fewer resources, the bar has been lowered. Your ability to put a demo in front of an investor has become much easier. But if you really think about the building blocks of a great company, which I'm sure all aspiring founders are looking to build, you still need great talent in-house who is going to help push the envelope and really build products and manage people to get that to a fully sort of full maturity. And so I would
It's,
sort
it's
of
it's fair to say you can't vibe code your way into
yeah,
a
exactly.
great
I'm a little
talent.
scared about the vibe coding. It's a great, I think it's again, like to your general question, I think it's a great trend. I'm glad we're on a, forward directed line on getting this more and more efficiency into the ecosystem. I'm a little bit more cautious about exactly where we are on that line.
Fair enough. You did you've done some actually great interviews, and I've seen them. And you did one with Lena Khan about the regulatory landscape. What's your perspective at this moment in time, and what you read, with the disclaimer that it'll probably change tomorrow
Yeah, exactly,
or
exactly. Who
Tuesday.
knows what's actually what the reality is? But look, I think the important thing about regulation in tech in general is that um, one, we obviously should learn from what's happened in the past, but the future off is going to look different than the past too, right? And so I
Right.
think sometimes the mistake policymakers can make is that we overlearn from what happened in the 90s or in the telecom industry, and now we're thinking about how to apply that to social media or AI. And sometimes those aren't as one-to-one as we might think, but it's helpful to have those precedents when you're thinking about it in a legal framework. But from a practical framework, it's actually can be detrimental. And so, and I think what we were trying to elicit with some of those conversations with the former FTC chair was really this idea that the way innovation happens in Silicon Valley is not necessarily only because we feel like Google is going to build everything, because clearly Google has not built everything,
Yes.
but also that the innovation engine is partially driven by M&A. So if a company, back to your question about how ecosystems get built, if a company gets bought in the US for $500 million, the people who are part of that company now have a little bit more cushion to be able to go start the next company and a bunch more learning to go actually build the next great company and see, hey, I had this pain point in this startup. How do I apply it to another great company? And so I think part of our work as participants in this ecosystem to policymakers is to really unlock and showcase, hey, here's how things actually work in our part. We're not trying to say in a biased way what policy is good or bad, but these are some of the practical ways, innovation has worked in the United States for the last 50 plus years. And it's not because we felt that there was monopolistic power that dominated everything. And in fact, it really hasn't been the case. And so, how do we think about this moving forward? It's hard to tell to your point. I think that there seems to be some parts of the current administration that sounds like they're more in line with the previous administration, surprisingly, about, big tech, little tech conversations. But I think it's a little too early to tell. There's a bunch of interesting M&A that's actually happened over the last few months that will be, I think, indicative of where the natural direction will be. Like Figma's acquisition, obviously, Figma's IPO will be a good sort of counterpoint to that, but the Wiz acquisition will be an interesting sort of case study. I think we're just early on the trend to really figure out where we are from this administration standpoint.
Fantastic. let's a couple of key things on the founder side. Look, you mentioned about making sure you mentioned founder market fit. You've talked about the fact that founders need to be able to do a level of depth of actually understanding the market. They need to be able to demonstrate, rigor and great in terms of being able to build a company. You also mentioned that the founder needs to speak to the right investor, and I totally get that. But Ansaf, between friends, and there's only 75 of us on the call, uh, there must be one or two things that you're saying, please don't do this. I do. I'm much more direct from that standpoint. Could you indulge us? Just maybe one, maybe two things. You're like,
Yeah.
this has never worked. Please don't do this. It won't help you.
I'd say don't overextend.
Okay.
And what I mean by overextend is don't say something that's not real, obviously, but also sometimes people say, well, we're in conversations with these three customers and we're about to sign a contract. And then in reality, it's like, yeah, they've had some nice warm conversations, but they're actually very far from signing a real contract, right? And or we're bringing on these three great people, but they're actually just part-time advisors, not full-time people. Or you hear a lot of these kind of different versions when you dig a little layer or two deeper. And so that even if you have a great opportunity, even if you meant it sort of in the right general with the right general intentions, it really leaves a bad experience in the mind of the investor because they just don't know what else you might be overextending on. And then that's very quickly, especially at the early stage where this is all a trust game, right? It's we want to build a relationship with the founder. We want to feel like we're going to be in business together for the next several years. When you tell me something, it means something. Even if it's bad news, good news, doesn't matter. But we want to know the ground truth. I'd say that's the number one thing. Don't overextend. The second thing I'd say is, people I think sometimes use signaling in the wrong way, like XYZ angel investors invest. That's great. Please tell us. But most good investors will make up their mind themselves, like really index on
Yeah.
your product, the market, your opportunity, not who else may or may not be involved. I do think that might work for some investors, but in general, it's much better to be talking about the merits of your company and what you're building versus this angel is invested or this person is part of this organization in some remote way.
I mean, Ansaf, you got to admit, if somebody comes up to you and say, "Use of kind interest in my round," you're probably just going to
That's
preempt it.
true. That's true. There are some exceptions to that,
Okay.
It's a high bar though. It's a high bar.
I'm just kidding. Message received. I've made sure they will not overextend either. Okay, so look, let's dive in on the ecosystem side because I think it's important. Let's do a hypothetical.
Yeah.
Let's assume Arifat decides, look, Ansaf, you and Yusuf need to get on a plane with me. So
Yeah.
he doesn't have a private plane yet. I
Not
don't.
yet. Yeah.
And apparently, I think the most he will get is kind of a premium economy ticket, if that. But I think, and we'll have to drive ourselves to the airport. But
Yeah.
we go to Pakistan, and he says, "Look, would like to for you both of you to give advice to the State Bank of Pakistan, all the authorities at the highest levels about the couple of things that Pakistan needs to do to be able to build a good ecosystem in venture. What are the one, two
Mm.
things that you would say, you would direct from a policy standpoint? That makes sense.
Look, I think the best policy, and this kind of goes back to our conversation in the US, is really don't be counterproductive, right? And like I know because the reality is, and this is my personal opinion, is that I don't think there's a lot of policy that actually boosts entrepreneurship. Like pure entrepreneurship is frankly market capitalism working really well, right? It's a founder who is with limited obstacles, hopefully from that are non-market related, being able to go pursue an opportunity and funders who are excited about backing that for the risk reward profile. And like if you can reach the most pure version of that, I actually think that inherent talent will solve that problem every day of the week, right? And so I think the best policy, frankly, is don't get in the way, and rather than doing something particular. And I think that many countries have tried different things, right? Like you've had top-down industrial policy in places like China, et cetera, that have really boosted obviously opportunity for different sectors. I think the type of coordination and also investment capital needed to do that successfully is a really high bar. And so again, I think that could be tough for Pakistan to do in sort of a very scaled way, but I do think there might be certain sectors where it just makes sense for Pakistan to try to have an edge on. AI would be one, I think, very important area where maybe some direct investment into the fundamentals of, having access to compute, for example, right? Or investing in research centers in the top universities that are focused on, AI research. Those things are important because if you don't have that, I do think we're going to be left behind in a very rapidly changing world. And so there are certain things like that that I think could be really relevant, but mostly it's try to get out of the way is I think an important policy thing
And
to
then
get
would
right.
that therefore extend on when you think about AI policy in the US or across Europe? What's your perspective there?
Well, look, I think in the U.S., things like the CHIPS Act and which under the Biden administration are kind of really important markers of where we think having homegrown access to manufacturing around semiconductors, et cetera, is going to be important over the long term, and supply chain issues, as we're seeing in real time with tariffs and
Yeah.
potential conversations on Taiwan and geopolitical issues around that. I think that the US is actually proactively thinking about how do we, for certain inputs into where we think are key industries and technology, again, AI being one major part of that. I do think that the both administrations have been trying to uh, focus on that and do take steps in that sense. But in the US, we haven't had a lot of sort of pure industrial policy in the past. It's not something that's really natural to the way that, at least in the last 30 years, that the US has sort of operated. And so we usually take more of that, how do we create the right incentive structures for investors and entrepreneurs to prosper versus trying to do something top down. The EU, I think, is a completely different story. I don't spend too much time there, but I think the question there, again, to the point of get out of the way, is like I think that overregulation there causes a lot of problems, right? And I think if you talk to any entrepreneur based in the EU, the number one thing they say is that regulation is an obstacle for them to really scale and build their companies. And it's an open question mark on how much that's actually helping the end consumers. You and I, when we go on a website in the UK, have to answer a bunch of consent forms, which I'm not sure that's made me any safer or not, but that's sort of just the nature of, and it's certainly caused a lot of burden on the engineering teams for these companies,
Yeah.
but unclear what the actual outcome of that kind of policy has been. So smart policy matters, getting
Yeah.
out of the way matters, and
Totally.
I think really identifying what are the key inputs for success in a really rapidly changing world and focusing on those fundamentals,
Yeah.
I think is going to be really important for any country.
Fantastic. Okay, let's. We've got 10 minutes. Want to go into a little bit of founder mode. By the way, thank you for the insights. I think it'd be
Sure. Yeah.
super, super useful. I'll go to a very common question asked to VCs last because you won't be surprised by it. Let's talk a little bit about founders who they should be either looking to as people who've inspired or people who've really impressed you, and you say follow that playbook or see what they've done to grow. You've met Arvin Jain, so we'll kind of do a little bit back and forth. I'll say one, and I'm happy for you to then say one as well. I think Eric Yuan, for example, built a phenomenal company
Yeah.
instantly. Right? I think you had somebody who had depth of experience of working in the conferencing collaboration space, understood that technology, understood the market, understood what the gap in the market was, understood all of those things, and was not able to just build a great product but then be able to build a company of substantial value and of course execution. I think founders should follow Eric and kind of what he's done, a lot of what he's done. Who else? Who would
I'd
also?
say two kind of also going back and forth. I'll say Bipul Sinha for CEO of Rubrik. I
Yes,
think
yes.
if anybody watches any videos of him, he is a force of nature. He's someone who I think not only saw an opportunity but really dreamed into reality that opportunity. And I think when we talk a lot about doing everything as an entrepreneur, he I think really embodies not only understanding strategy but just being everywhere he can to make that into reality where he can get on a plane to close a deal. He will be in front of a VC the next morning to raise the next round of financing. He knows how to recruit. He knows how to when you are someone looking to either invest or join a company, that kind of energy is actually it's a superpower because it actually gets people to take risks with you in ways that I think if you didn't have that kind of energy, it would be really hard to build something really big and great with.
Fantastic. I think Tracy Young is phenomenal, who basically had built PlanGrid and done that for several years, pure grid, being able to sort of do that. Now, basically, of course, building Tiger Eye. Thing that stood out for me with her is she just has a tremendous amount of depth of understanding the problem, relating to that, and being able to then build a product around it, and then being able to go to market. Who else would you
Yep.
say?
I would say so Jensen from NVIDIA, for not obvious reason, I think when he came to Stanford last year, and this is a video that's available on YouTube, he talked about what he wishes on every Stanford student is, I'm paraphrasing, but it's something along the lines of immense pain,
Right.
and
Exactly.
what he or suffering, I think is the word he used. And the reason why he said that was because I think the mark of any great entrepreneur is the ability to not only sort of have that level of perseverance, but this idea that, to do and achieve anything great, you kind of have to go through this really terrible
Immense
crucible,
pain.
right? And I think people and on these calls or whatever, we might sometimes glorify, entrepreneurs at the end state, but the reality is that those 10 years before that are many sleepless nights, many things that go up and down in one single 24-hour day of, having a great customer sign and then having one churn at the same time and losing a candidate to another company, losing your co-founder. Like there's so many things that happen on the journey to now a company like NVIDIA that we all kind of look up to. I thought it was just a very honest and very prescient take on, frankly, what entrepreneurship really is.
Okay. Um, each of those founders built phenomenal teams. What do you look at for in founding teams that outside of spending time with the founder and how they think about building a team that
Yeah.
you could give advice to founders?
I'd say being complimentary. Like if you can truly find people who are a yin to your yang is usually when we see a really strong founder market fit. And that's sometimes even baked in personality, right? Like I'm thinking a lot of folks who are, one founder is really outspoken, can be, can go in front of a group of 1,000 people and speak sort of impromptu. And the other person who is actually quiet, but really thoughtful and like 24 hours later we'll write a memo or an email to you saying, hey, this is the 10 things that we need to focus on. You're like, that's brilliant, right? And so I think it's not just can somebody code and the other person, be the business person. I think it's deeper than that around what are the types of qualities and things that you both bring to the table that can, or three people bring to the table that are really complementary. And the other thing I think that we're going to see more of is that you don't have to have a co-founder. I think there's this sort of thing that's out there in the ecosystem over the last many decades now, like, having a co-founder is important. I think that we're seeing a lot of great examples of founders who are solo founders. It's harder, it's much more difficult,
Yeah,
but I think that in a world where things are becoming more efficient, um, there are many reasons to actually potentially go it alone as well. And so I think that that's not this is one size fits all advice that most venture capitalists like to give. I think it kind of breaks down in many areas, but this is another area that I'd say is less important in some ways.
fantastic. Final couple of questions before we get to the lightning round, which is a little bit more fun. Think about the space of AI, which has just gone all over, I would say, and has really transformed kind of our thinking. Areas that you've been excited about in terms of AI, whether it's vertical, whether it's infrastructure, perspective, please.
Yeah, I think there's just so much white space available, frankly, in AI. Like I think for better or for worse, I'm a believer in the opportunity set broadly and the transformation that's happening. Look, a couple of just sort of high level areas. I think data infrastructure is really important, and it's important for two reasons. One, if you want to do anything meaningful with AI in the enterprise, you actually have to be able to access, structure
Yes.
information in a way that's actually digestible by whether it's an application or LLM or whatever it might be. And I think we're actually very far for most organizations to do anything interesting with their own data in that context. And so I think that's a really big opportunity. I think when we think about the potential of where LLMs are heading and what the frontier looks like, the data that powers that is also a massive obstacle and input. And so when we think about, we talked about places like life sciences, healthcare, even legal, financial analysis, which, we've both seen companies start to emerge in those sectors. The frontier of what LLMs can truly do is still actually not. I think we have a lot more room to grow, and a lot of that is a data problem. And I think there are some interesting companies who are helping solve some of those areas in particular. I think the application side of AI is still very wide open. That's the area that I'm most excited about. It's how you and I, as business users, potentially even as consumers, are going to be engaging with platforms very differently over the next 5 to 10 years. And so if you are, for example, just to bring it home, like a salesperson, and you are thinking about waking up on Monday morning and what are the 10 things that I need to do? Today, that's a manual process. It's like, did I remember on Friday to send the deck to that one customer? Do I need to go into Salesforce and figure out what the next 10 things I need to do are? But what does a co-pilot look like for someone like that? What does a co-pilot look like for an HR person? What does a co-pilot look like for the CFO, right? There's just so much white space that has been unsolved
Right.
still in the enterprise and for applications. I think we're wide open there. And then the last thing I'd just say is security. I think that the surface area for security is drastically changing. It's increasing, very quickly, and the types of attacks are changing. And so to be able to protect companies and be able to secure that type of surface area, I think we're going to need a very different sets of companies and approaches.
Fantastic. Okay, last couple of questions. First and foremost, they came from the audience. You can't blame me,
Oh,
or you may
yeah.
do. That's totally fine. But I'd still buy you lunch. First question: is there a consumer product that you have taken a liking to, where you're like, that's super impressive?
Yeah, right off the top of my head, granola. It's not really a consumer product, but it's like a prosumer product, I'd say, right? Where this is a company, for those who haven't used it, which essentially, if you're in meetings of any kind, it can help summarize notes and next steps. And, we've heard this. Yusuf and I have been pitched some version of this for the last 7
Yes.
years at least, right? But I'd say the performance, this is kind of goes back to, when you see it, and like, the magic that you feel when you use this product is immense. Its
Right.
ability to synthesize and create sort of next steps and memory for you. It truly feels like an extension of your brain, which
Right.
is pretty incredible. So it's not a pure consumer product, but it's a prosumer product. You can sign up as an individual. You don't have to be a company or organization to use it.
Awesome. That's good to know. Second, if you were a CEO of a company, which company would you want it to be and why?
Well, great question. Well, I
And by the
truly,
way,
truly, it's my
just
own
to be
company.
clear,
I mean,
Ansaf, we're not. I'm not going to go to the CEO and say, Ansaf
yeah,
would
he's
do a
ready
better
to.
job.
Truly, and this is not I would truly say that I would want to be CEO of my own firm. I think the reason why I started on this journey is because I love what I do. I love being able to partner with founders, usually at the earliest stages, and doing that across many companies. I think it's a unique privilege. I think it's the most intellectually stimulating opportunity set, and it changes every day, which is exciting. And so I know that sounds like a cop out, but it truly
No,
is.
no, it's a surprise, surprise, Ansaf. We had five of your potential LPs on the
Yeah,
call, and
exactly.
they
Great.
got the right
Perfect.
question.
Yeah.
So you had the right answer. That is the
Yeah.
right answer. So well done, well done, Ansaf. Thank you for making time. It's great to talk to you at length. It's great to be able to get your insights. I know a lot of people have taken a lot of notes. I know I've taken a lot of notes. I wasn't using granola, but I actually took a
Next
handful
time.
of
Yeah.
notes. So FYI, but look forward to hopefully working with you in the not so distant future, and wishing you nothing but success in the time ahead. So
Perfect.
thanks for making time today. Really,
Thanks,
really
thanks for
appreciate
the
it.
great questions. Really appreciate it. And thank you, Ollie, for helping organize this.
Thanks, Ali. Really appreciate it. Congrats to everyone at the Park launch, and congratulations on the recent unconference as well. I heard it was a fantastic event. So looking forward to time ahead, and look forward to the next webinar. Thanks, everyone.
Thanks, everyone.